After summer break, we are back together with Alexander to our classes where we discuss markets, discuss trading, different instruments. So I'm happy to welcome everyone on this class. Good afternoon, ladies. Good afternoon, gentlemen. Good afternoon, Alexander. I'm happy to welcome all of you on our class. We will discuss current situation, different markets, different stocks, and of course, it will be interesting because we have a pause for months, and now we are back with our classes. And as usual, before we start, I would like to warn about different warnings which can happen on the market, of course. To start with a risk disclaimer that trading and investing carries risk, so it's really important to understand how market works and how to work with the risks. Of course, we also touch this point in our classes. For those who participate for the very first time on our class, I want to say some words about Admirals. Admirals is a brokerage company, so we work already more than 20 years. We provide service on different countries. We have a bunch of licenses all pretty much all over the world. We provide different platforms for trading, for investing, together with MetaTrader, together with our own web platform and also our mobile app. So each trader or investor can find suitable way how to put orders and execute positions. And I want to also share a good news, which we have during this summer. So previously I told to all our participants that for investors, we have a nice offer of possibility to add in investment portfolios fractions of shares. So you can add part of share, not the whole piece, but you can add part. And a couple of weeks ago, we also launched the same solution for ETFs. So now it's even more now our clients have more possibility to manage their positions and their risks with ETFs as well for invest things. And also it's available on our mobile app, on MT5 platform and our Admirals platform inside our traders room. Of course, as a reminder, don't forget to subscribe to our YouTube channel, to our Telegram channel, to be informed about all news about upcoming events. And also, if you don't want to miss a recording of our class with Alexander, so subscribe to our YouTube channel. And if you miss the live class, the recording will be available day after on our YouTube channel. And of course, for today's agenda, so as we had this summer break, it will be nice to catch up with Alexander about current market situation, to hear how Alexander, yours summer is going in terms of trading. Of course, it's the most interesting thing. How was it for you? Also, as we see correction on markets and we see correction on some stocks, so it will be also good to discuss main markets as we usually do, and some specific stocks. Also, in the end of this video, I will explain how it's possible to use Alexander's indicators on MT5 platform, and also I will introduce our contest which we have with Alexander. Today I prepared the market snapshot in a different way, so just to show what's happened, let's say, on the last 30 days for last month. And we see that in terms of drop down, we see that biggest part, I mean, quantity of stocks have corrections. Of course, it was, let's say, some stocks who showed, let's say, 20% increase, like Eli Lilly, for example, but it was a lot of them which are somewhere in the middle. Some there like step on the same level as it was at the beginning of the month, but still we see that it's together with correction on S&P 500. Of course, it's due to correction of stocks, we all know. But here, just before we start, as I normally show, let's say, the market snapshot, I show what is happening on average, let's say, on a stock market. And after this warm-up, I'm ready to pass microphone, Alexander, to you. It's I mean, we wait alone. I got, let's say, a lot of questions when we are back with our classes. So after this summer break, finally we are back, and we can review the end of summer and to be prepared to autumn. Alexander, it's a pleasure to have you here, and microphone is yours.
Thank you very much, Roman. Very kind of you. Summer is an interesting time. Historically, markets tend to do well early in the year, and then again towards the end of the year, October, November, December. Spring, summer, early autumn tends to be bearish very often, or just simply difficult time, no clear trend. And the market was the U.S. market was extremely strong in early in the year, and now it's undergoing a correction. And Roman asked me to show you some of the trades I did during the summer. It was actually a very good time for me to trade. But what I suggest we do, maybe Roman, if you let me take control of Zoom, I will show. I would like to take our viewers on a quick tour through international markets, and then we'll come to the US and see what we do there, if that's okay. If that's okay with you.
Yes, it's okay. So you can share.
Okay, we'll do share screen. Oh no, I don't want to cancel. So, am I sharing the screen now?
No, I stopped mine, so no.
Okay,
no.
So share screen, and let me go to TradeStation and share. And you should be seeing, what is it now? Okay, here. This is something. Do you see my chart now?
Yes.
Great.
All good.
So this is something I do, and I'm preparing my pen to write down which are green, blue, or red. That's in reference to my impulse system, which actually somebody sent a question about it. So I'll address that question later. But basically, the impulse system helps me orient myself in any market, in any time frame. It's not an action system, it's a censorship system. When the impulse system is red, it means I am prohibited from buying. When the impulse system is green, it means I am prohibited from shorting. And when it's blue, I can do pretty much anything I want, as long as it has some logic to it. So we're going to take a quick walk through 14 key international markets, and then we'll come to the US. Australia, the impulse system is red, and you can see how Australia actually broke to a new low for this year. Is it a real break, or is it going to be a false breakout? We'll know soon enough, but it's bearish at this point. No buying permitted. Canada, red, but it's well above the year's low, so it's clearly stronger than Australia. Germany, red, and it's well above the lows of 2023, so it looks more like a correction. But the impulse system on the weekly chart is red, meaning no buying allowed for Germany today. Hong Kong, very weak and trading at the new lows for 2023, red, of course. Japan, red, but well above this year's lows. You notice we're getting red, 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 red. It's very unusual to have such a sequence. Everything is red. France, red, and seems to be holding support, and certainly well above the year's lows. Singapore, red, made a new low for the year and recoiled from it. So this could well become a false downside breakout, which is a very bullish pattern. But at this point, this is so be on alert to buy Singapore, but not allowed to buy it today. It's still red. Taiwan, red, well above 2023 lows. UK, red, well above 23 lows. Mexico, It's actually green. Mexico has turned up this week. It took out previous week's high, and it's quite strong. Our southern neighbor. Canada is weak. Mexico is strong. The first non-red market. South Korea, red. Brazil, another rallying market. It turned blue, neutral. India, also neutral, blue, and China, red. So out of 14 markets, we have 11 red ones, 2 blues, and 1 green. Certainly, it's a very bearish situation, although some of those red markets appear to be potentially are drawing false downside breakouts, which is a very bullish pattern. But I find that the impulse system keeps me out of a lot of trouble. It forces me to sit on my hands and not act, while not to guess, not to jump in too early. So the impulse system on the weekly charts of 14 world's key markets are almost all red, with just 2 blues, as I said, and 1 green. Let's take a look at the US. S&P 500, actually having a rally today. It was red yesterday and turned blue today as the rally goes on. What does this chart tell us? Well, you can see, and you can see it on every chart that I use, a pair of moving averages, a fast and a slow one. The slow moving average about twice as long as the fast. So 13 and 26 bars, or 12 and 24, or 11 and 22. So you can select any length you want. There is no magic set of numbers. Just once you select it, be sure to be consistent. I call the space between those 2 moving averages the value zone. A fast moving average shows how the market is valuing, how the participants are valuing this market in the short run. And the yellow line, slow moving average, shows how people are valuing this market in the long run. And you can see that while a bear market occurs here in the left side of the chart, as the market goes down, it pulls back to value and collapses, pulls back to value and collapses. Here, pulls back, breaks through the value zone, and that's a warning that the bear market may be finished. Comes down, and we can see a false downside breakout. You see how the market broke to a new low, but couldn't stay there, and a bullish divergence of MACD histogram, a bullish divergence of MACD lines, a bullish divergence of force index. So this was an indication that the bear market was coming to an end. I'm sorry that at the time I was still bearish. I expected the bear market to continue, and it took me several months to finally, quote unquote, get religion and turn to the right side. But now we're in a bull market. And how the S&P is behaving in a bull market? Above value, pull back to value. Above value, pull back to value. Above value, and we're having a pull back to value now. So now it's a dangerous time to be shorting. It could be that the bull market is trying to resume. Maybe the correction will continue a bit longer, but in the short. But I need to see more evidence of that. We don't get paid for being heroes. I always look for easy trades. This is not an easy time right now. So let's take a look at the daily chart. But before we do, let's take a look at one of my favorite indicators, the new high, new low index. So this is the weekly chart on the left, the daily chart on the right, and I track the new high, new low index in 4 time frames on the daily charts, going from the bottom: 1 month, 3 months, a quarter, and a year. And what we see here is that the new high, new low index is in its bearish zone in every single daily time frame. It's also bearish on the weekly chart because it's below minus 1,000. So it shows that the leadership is still in the hands of the bears. What do I think about all of this? I think, and now this is an opinion, I think that we saw a very serious correction in this market, and I certainly traded it. I traded short only for the last month, and we see a very deep oversold bottom. Prices are bracketed. I bracket prices with ATR channels, 1, 2, and 3 ATRs, and 3 ATRs pretty much indicate an extreme. So this was the manic market, time for a rest. This was the manic market, time for a rest, for a correction. And here, just last week, it was a panicky market. And now the market is recoiling from that panic, almost like a ball. You throw it hard against the floor, it will bounce up. I expect, based on my experience, that this rally will fizzle out in about another day or two, and it will challenge and probably take out last week's low. And that's where we will see great bullish divergences, and that will be a very good buying opportunity. So I'm waiting for another down leg in this correction, and that's where I will be prepared to go seriously shopping. Let's take a quick look at the daily chart. So once again, this is the weekly S&P. This is the daily chart of the S&P. You can see how deep a MACD histogram is on the daily chart. There is no sign of any kind of bullish pattern. It just the bear is taking a bit of a break at the right edge, a bit of a pause, but the total power of bears is huge. We can see that force index reached an extreme reading in early August. It hit an extreme low again. This was last Thursday, and I think that if there is another decline, and the MACD histogram declines a little, force index declines a little, we're likely to see a bullish divergence, a more shallow bottom, and in those indicators, and that's when I'm going to be prepared to go shopping. So Roman, here it is. That's what I wanted to say about the market today. How do you want to proceed? You want to take over the control and look at a variety of different markets using your software, or you want me to show some trades from this summer? You tell me what you think.
We can start with MT5 platform. So just to look at some instruments, and then if we will have time, we can jump back. So
Great.
I will keep in mind to save some time if you want to share, let's say, some.
While you're switching, let me answer actually the only question that came in for this class, and perhaps other people. Anytime somebody asks a question, I think there must be 5 other people who have the same question, except they're either shy or lazy about asking. So when I answer one person's question, I think that it will be quite interesting for several. This guy, let me just pull it out. He says, a question about the impulse system. Do you understand it right? If impulse is blue, current candle closed above previous, red closed lower. No, it's completely wrong. You're totally not getting it. The impulse system, which I developed ages ago, combines 2 key factors about any market: inertia and power. Inertia and power. So if inertia is up and the power is getting stronger, the impulse system is green. If inertia is down and power is getting also deeper to the downside, the impulse system is red. And if they go against each other, it's blue. Blue is neutral. So you can see the system expressed in MetaTrader on this little strip in the center of the chart. Let's take a look at the daily chart. When just in recent weeks, you can see there is an area of red on this strip. That's where MACD histogram is declining and force index is becoming deeper. And so that would turns the impulse system red. Now, near the right edge, the inertia is measured by fast moving average. The fast moving average is still declining, but MACD histogram already began to rise. And so that makes the system blue. If we look in the center of the chart during this rally, that actually the highest point on the daily chart, you can see the impulse system was green. It was green because the moving average was rising and the MACD histogram was rising also. So the impulse system, it's not a single factor. It's a two-factor method that combines inertia, which is the slope of a fast-moving average, and power, which is the slope of a MACD histogram. It's all described in my book, especially the last one, The New Trading for a Living. So look it up someday. Okay, let's go to the S&P. So looking at this chart,
I opened the DAX, so should I?
Oh, I'm sorry, it's DAX. I'm saying, how come it doesn't look exactly? Okay, DAX. Okay, here's DAX. So the weekly.
Now it's DAX on both charts.
Now it's DAX. Okay. What I don't like about the weekly chart of this DAX, look how in recent few months it made three tops, 1, 2, and 3, right? And at each of those tops, MACD histogram was getting weaker, and at the last top, it didn't even come above the plus. Now, looking at the right edge of this chart, we can see that the latest bottom, the current week's bottom in MACD histogram is deeper than the previous week. So it tells me that bears are getting stronger. Today, the DAX is having a nice day. It's been pushed down. It's coming up to get a breath of fresh air. But this weekly chart suggests to me that we haven't seen the bottom of this decline yet. It's a bearish pattern. MACD histogram keeps getting stronger and stronger to the downside. We'll look at the daily chart on the right, and we see a double bottom here, right, between July and August, but double bottom is not enough. Take a look at MACD histogram. Look at the depth of MACD histogram in July and its depth now, and you can see that the bear became much stronger. There is no bullish divergence of any kind. Same thing with the force index. There was only 1 day of a bull panic in July and 3 days of bull panic here. So I think that what the DAX is seeing now, I think, is a pressure reducing rally. It got pressured by the bears. Now it's step back. It's taking a break, and bears are regrouping, and bears are going to press the DAX even lower, I think. Write it down, and when we meet together a month from now, you remind me, was I right or was I wrong? Yeah? That's the only way to learn, keeping good records. Was I right or was I wrong?
Thank you, Alexander. Let's look at EURUSD.
On the weekly chart, we see a very orderly rally in the euro in the last 6 or 7 weeks. The euro has weakened, but it's hitting the support zone. Look at the previous bottoms. It's pretty much today where it was on 2 previous occasions during those pullbacks in a bull market. And if we look at the daily chart, you can see that today the euro wiped out previous week's low, And what did it do? It immediately reversed, and it's now trading near the high of the bar. Take a look at the MACD histogram and tell me, are bears becoming stronger or weaker? Take a look at force index and tell me, did bears have more force in July or now? So it looks like the euro is in the bottoming process here.
Thank you, Alexander. Let's look at gold.
Oops. Gold. Very interesting. Very interesting. Very interesting. So on the weekly chart, there was a false downside breakout. There was a bottom in springtime, and gold punched below that low and rejected that low. So we have a false downside breakout on the weekly chart, and the impulse system has turned blue. It allows us to buy. When it was red, we were not allowed. Today we're allowed to buy. And that's all. The weekly, I don't make trading decisions on the weekly chart. I use the weekly chart for a general idea. Should I be a bull or a bear? Well, when prices are low, I want to be a bull. When prices are high, you can see this finger to the sky that occurred earlier this year. I want to be a bear. Here, I want to be a bull. Double bottom, false downside breakout. MACD histogram is not as deep as it was before. So I go to the daily chart on the right with the thought that I should look. It's not a strong buy signal on the weekly chart, but it's a permission to buy. So let's see what the daily tells us. Well, the daily also shows a false downside breakout, and the impulse system is actually green because the MACD histogram is rising and a fast-moving average is rising. We're allowed to buy, but I wouldn't be in a hurry to buy here. Price is already in the value zone. I like buying quiet markets and not wild markets like gold is today. And I would wait for a pullback. We very seldom see like V-shaped bottoms. So I would wait for a couple of days pullback, and then I would be looking to buy gold. But I think gold is approaching a buy zone, maybe later this week, more likely early next week.
Thank you. Let's look at oil.
Oil is the lifeblood of modern economy, and oil certainly survived on the weekly chart. Oil survived a nasty bear market, developed a set of beautiful bullish divergences in the MACD histogram and force index, and it started to rally. And right now, at the right edge, oil is correcting. It actually touched the value zone this week, but notice the impulse system is still blue. It was green, now it is blue. It never turned red. So, and it will stay blue as long as the last price stays above the value zone. MACD histogram is declining, but price is holding above the value zone. We go to the daily chart. We see a correction in oil, and what we're seeing today is a kangaroo tail, or potential kangaroo tail. We'll know for sure tomorrow. A kangaroo tail is a very tall, very long bar or a candle surrounded by normal sized bars. For example, if we go back to May, when gold tried to rally and put this single bar going up, that's it. And so that was a kangaroo tail to the sky, called finger to the sky, and then oil declined. Now there is a real potential for oil. If tomorrow oil stays pretty much where it is now, it will complete a kangaroo tail, and I pretty much always trade against kangaroo tails. Kangaroo tails show that the market tried to go in this direction, in one, whatever, up or down, tried to go in that direction and failed. So I usually trade, very often trade against kangaroo tails. So with crude, with oil, I would be preparing to short it, to buy it, to go long, if tomorrow the kangaroo tail survives. Roman, I'll step away for 10 seconds. The window is open. We're actually having a very cold summer here where I live, so I just want to close the window. Okay.
So do I. But
really?
Okay. Yes, take your time.
Okay. You know, yesterday I was talking to a friend of mine in Italy, and she says 40 degrees, 30 water in the sea, 27, like bath water. I say, well, here we have 10 degrees at night, and it goes to 18 during the day. It's a very unusual summer.
So you and me, we have 50% discount from Italy weather.
Yeah.
And for the last, let's say, the markets.
Bitcoin.
Yes.
Bitcoin.
Open Bitcoin.
Bitcoin is in trouble. The latest is the U.S. government is now starting to put pressure on Binance, accusing them of helping people move money out of Russia. And so one big exchange, the FTX thing, collapsed, and apparently there's a criminal case against them. Binance is being pressed on all sides. In the good news for Bitcoin, the main candidate for president in Argentina says he wants to abolish central bank and make Bitcoin legal currency. But of course, Argentina is not one of the bigger countries of the world. There is a panic in Bitcoin. I don't follow it closely. It could be because of this legal political pressure, but Bitcoin certainly had a terrible week last week. But this bar, both on the weekly and the daily chart, looks like a kangaroo tail, and as long as this tail holds, I would be buying against the tail. But I'm not a crypto person. As I've said many times, I'm afraid of those things. It's too dark for me. But just as a technical market analyst, I would say the impulse system is red on the weekly. Have to wait until it stops being red. On the daily, I see a kangaroo tail to the downside. So as soon as the weekly stops being red, if somebody had held a gun to my head and said, Alex, you have to trade Bitcoin, I would buy it.
Thank you, Alexander, for your review. And then we can jump to stocks which I sent to you. Just to look at them, some stocks which had movements on recent weeks and months, and to discuss, let's say, on them. And first of it, it's Nvidia.
You know, Nvidia is a crazy stock. From what I understand, Nvidia makes this chip on which artificial intelligence runs. And so anybody and artificial intelligence is at the forefront of everybody's attention. I even downloaded ChatGPT myself, occasionally look at it, but not very closely. But what's happening with Nvidia is absolutely, totally psychiatric mania. The previous run-up in Nvidia, and looking at the weekly chart, Nvidia was trading at about $100, $150, and it ran up from 150 to 450. So it tripled this year. And I made some money shorting it actually when it made this top and choked up and this beautiful ride from the top down to the value zone. I don't have a position in Nvidia now. At the time I was shorting it, and that was about 6-7 weeks ago. There are certain. I'm a technician. I'm not a fundamental analyst, but some fundamental measures make sense, and one of them is price to sales, and that indicator showed that in order to justify the price of Nvidia stock at $400 plus, they would have to take next 29 years gross income, not profit, gross income for 29 years. It's a crazy number, right? If stocks that trade at 29 P/E, that's profit to earnings. But this was sales to earnings. Imagine, company has to operate for 29 years, only taking money in and not spending, no salaries, no buying of supplies, no buying of equipment, and taking all of that money, that would justify its price. So it ran up and then it had a nice little pullback. Today, everybody is breathing heavily. Why? Because tonight, this afternoon, after 4 o'clock, Nvidia will declare its earnings. And the whole market is holding its breath to see what the earnings will be, because if earnings are great, I took a picture, a screenshot from an article. This analyst says Nvidia is going to be $1,000 stock quickly. On the other hand, if earnings are disappointing, all this disappointed lovers will run for the exit, and Nvidia can really suffer. I wake up this morning, I don't have a position in Nvidia, and I say, you know what, I'm a contrarian trader. It's priced crazy. There is the weekly chart. The weekly chart is attempting to draw a double top. On the daily chart, there is actually sort of a divergence. And I said to myself, let me check option prices on Nvidia. Maybe I will buy myself a far out of the money put. Put is a bet on the decline. And I never buy puts or calls. I write them, but I don't buy them. But I thought, well, let me just take a few $100 and buy myself a little lottery ticket on the decline in Nvidia. I went to look at options prices, and they're crazy. They're crazy priced, both calls and puts. Apparently, there is a huge it's like the whole stock is like a coil. There is a huge number of bulls, and apparently I see now a huge number of bears. I thought I was alone. So tomorrow, you will see a big jump. Which way? Don't gamble. Don't gamble. You can really get hurt on something like that. If it's some kind of crazy good report, it can jump from it's trading now. Where is Nvidia now? It's about $470. It can jump from 470 to 870. Stranger things have on a gap, right? No stops will not be helpful. On the other hand, if earnings are bad, it may drop from 470 to 300 on a gap. No stops, So don't go there. Just this is a major accident waiting to happen. Whether it will blow up or sink down, watch it. They sometimes show. I don't own a TV set. Haven't owned a TV set in a long time, but I know that sometimes when they show advertisements on TV, there is a line at the bottom which says, "Don't all tricks performed by trained professionals. Don't attempt to duplicate at home." Don't touch it today. Don't touch Nvidia today. Just you may win big or you may get ruined. ruined is a bad thing. Yeah. So there is a risk of ruin in this thing. That's why I stay away from it. Tomorrow morning we'll see what happens, and I'm slightly more. I'm waiting for a disappointment in Nvidia, but I can't find any way to trade on it. I wouldn't want to put any money at risk on it, and I go into risk, but not here. Long story on a very famous stock.
Noted. Let's review then tomorrow.
Yeah. Oh, not even tomorrow. The earnings will be announced right after 4 o'clock New York time. So that's right after 11 o'clock at night your time. If you're not sleeping by midnight, just check the screen and you will see. It will be all over all news what Nvidia did, and stocks trade basically 20 something like 22 hours a day, 22 hours and 15 minutes a day. So it'll be trading overnight, and you will know exactly what you don't have to wait until tomorrow morning to know the answer what's happening. Okay, next up.
Thank you for that stock overview.
A friendly warning not to gamble, because it could become it could be very profitable, but it could be massively more dangerous. Let's say you invest $1,000, 470. You invest $1,000. You buy 2 shares of Nvidia, and it goes up 50%. You made $500, right? But let's say you decide to sell it short. You decide to buy it, and it goes down $200-300, and you will lose more than you gained. So it's too unbalanced, too dangerous. I'm not trading it, and I love trading important stocks, not this one. Be careful.
Thank you,
The first rule of capital preservation: don't lose your capital. Okay, next stock, please. It's Lilly, yeah, LLY.
Yes.
You know why the stock is going like crazy? It's selling this medication called Ozempic. So somebody who is overweight can get themselves with a doctor's prescription injections of Ozempic, and Roman, they're gonna look like you, slender, elegant, sharp. So some fat guy who doesn't have, or woman who doesn't have discipline to put themselves on a diet can buy medication and lose weight. Isn't it magic? Huh? And continue stuffing their face with all kinds of health effects. So everybody, lots of people are using it. Lots of famous actors are using it. George Clooney is on Ozempic. Everybody is on Ozempic. And the stock is going up. It reminds me, long time ago, Pfizer came out with Viagra, and again everybody was shopping and buying, and this is a super popular drug that has really well. Now there is a competitor called Wegovy. But in any case, this is why the stock is going up like crazy. It gapped up when the government gave them permission to market this drug for weight control, because it was initially developed for some medical condition, and then they realized it had a side effect. By the way, Viagra was developed to help people grow hair, right? That was the original thing. Then they realized it had a side effect which everybody loved. So now Ozempic, developed for something, I don't know, something very ordinary, and then turns out people lose weight on it. Good luck. How would I trade it? I keep looking to sell it short, surprise, surprise, but I can't get my fingers around it. It's strong, it's going up. I don't chase trends. On the weekly chart, it's trading above this above the channel, so it's in a crazy zone. It's a manic stock. The daily stock, the daily chart is getting a little toppy, but the impulse system is green on the daily. So I look at it like, you know, like watching a car race. I'm not going to be in it, but I enjoy watching it. Sorry.
Thank you, Alexander. Let's look at another stock. It's Moderna.
Yeah, yeah. Now here's a real stock, a real stock with a real company with a real product that makes a lot of sense. And I could never understand why Moderna was sinking like that. So if you could compress the weekly chart so we could see a little more. The stock went from you know, low double digits to $500 because this was one of the key beneficiaries of the pandemic. They developed a vaccine, and of course now there is a whole lot of arguments about how it was. In any case, they made a lot of money on the vaccine. I got Moderna injections 2 or 3 times, so no side effects. It was a little sleepy one time, that's all, for half a day. So the stock flew from 50 to 500 within a few months, and then it had this long bear market. And meanwhile, they're using they announced that they're using their technology, which they developed and with which they produced this vaccine against COVID. They're using it for 7 different diseases, including some cancers. And the tests are very promising at this point. And if you look at this weekly chart, you will see a false downside breakout below $100, below $111, right? Do we have any long-term investors here in the room? This is the stock to look at. This is the stock to consider, because it's first of all, it's a real company with a real product, and they have the science which others simply don't have, right? So it's not just marketing, or very little marketing. They developed scientific technologies which are patented and which others simply don't have. And now the pipeline is beginning to fill up with this new interesting medication. So if you're looking for a long-term investment, for a long-term, not a trade, a long-term investment, this is the stock to consider. Maybe I should buy some for my retirement fund. I probably should, and I very well might. But how will I handle it? I haven't been watching it closely, and I missed this. And then this pop happened, and the stock just within a week falls downside breakout on the daily chart. Yeah, and then this pop happened. I would wait for it to pull back to the value zone in the daily, but I'll definitely be a buyer here. Got to have it. Got to own it. Yeah. Good luck.
Thank you, Alexander. Another stock which jumped, but from other side, it's SolarEdge.
Yeah. It traded, it broke every support. I have no idea why it fell, but there's a very good book written, I don't know, maybe 20 years ago. It's called One Up on the Market. One Up on the Market. I think Peter Lynch is the author. Peter Lynch, Lynch. Peter Lynch is retired. He is rich and retired. He was one of the most successful money managers in the United States. And he wrote this book, One Up on Wall Street. And he says there, trying to catch a bottom, it's like trying to catch a falling knife. You invariably grab it in the wrong place. You cut your hand if you try to catch the knife. Let the knife fall. Let it hit the ground. This is a paper knife, so I cannot cut anything with it except for paper. But let the knife fall. Let it hit the floor and vibrate. And that's when you take it by the handle. And now you have it, right? So what we see on this chart, it's a falling knife. Don't be a hero. Don't be a hero. Let it hit the floor. Form some bullish divergences. The impulse system has to change. If you go back to Moderna for a minute, in the same chart.
Do you want me to compress?
No, it's the same, yeah, whatever, same thing, Moderna. You see, look, Moderna drops, right? You can see where there's a falling knife, where it flies down, and the MACD histogram gets tremendously deep, and force index is at the channel line. And then Moderna hits the floor and hits the floor. You can see it's vibrating. And that was the final vibration last 2 or 3 weeks. This buying it here, this is no falling knife. The knife fell more than a year ago, and it vibrated. And now it's coming up from the floor. This is what you want to buy, not SolarEdge, where it's in the midst of falling down. Oof, scary.
Thank you, Alexander. And the last one from my list, but what we discussed for a couple of previous sessions as well, and just to look where we are right now, it's Tesla.
I began saying some time ago that the happy days are over for Tesla, I think, because for many years Tesla was the one, really pretty much the only electric car company, and it's no longer so. There are lots of electric car companies. You can buy electric cars from startups, but you can also buy electric cars from Mercedes-Benz and from Porsche, and the quality is better. And Mercedes-Benz now has technology, the driving technology, which is better than Tesla. I began saying several months ago that to me this is a stock which I'm looking to sell short. So whenever there is a rally, I look for a shorting opportunity. Here at the right edge, there isn't really anything for me to do. The stock came to the on the weekly chart on the left. The stock came to the value zone, and it's trading at value. It's neither overbought or oversold. It's at value. We look at the daily chart. It hit the lower channel line last week. It's also now in the value zone. You know, when a stock is trading in a value zone, it is fairly priced. Fairly priced. The market thinks, all market participants agree that it's not too expensive and it's not too cheap. So why buy? If you're a trader, you want to find undervalued stocks and buy them, or you want to find overvalued stocks and sell them short. And this one is fairly priced. I look at it every week just to see if there is any action there, twice a week sometimes, but I don't see any opportunity at this point.
Thank you, Alexander. As we discussed a couple of minutes ago, that I will try to save a time if you, let's say, have something to share, let's say, from your side. So we have 6-7 minutes, and for example, I can give you back a screen sharing option.
Thank you. 1 second, I just double clicked on the chat. Well, let me show a few stocks, and maybe we can go a few more minutes and look at. I'd like to answer some questions, so it's not just a monologue, but okay. So I'll just show you a few stocks, and really just a few stocks in a quick view. What I like trading. And as I said, I'm a bear. I'm a short-term trader, and I love and I like bearish trades. FSLR, First Solar, false upside breakout on the weekly chart, and a total beauty on the daily. This is one of the patterns I love trading. You see how the stock gapped up here, right? So it was trading at 198 and it opens at 224, 12% higher overnight. Why? Earnings. Well, that's wonderful, earnings. So what's next? And then it begins to sink. And somewhere during the sinking process, when the last price is below the open price, I sell it short. And I don't hold it for very long. Get a nice chunk of profit. But look at the pattern. Crazy good earnings, fantastic opening, and immediately begins to sink. And I see it, we're coming out of the earnings. There are 4 earnings seasons in the US every 3 months, and we're just at the end of the current season. Nvidia is declaring tonight. That's the big deal. I keep an eye on earnings calendar very, very attentively. Earnings, hysterical rally, and no follow through, and it begins to sink. This is the daily chart, same day. What else? I think this was also an earnings play. Yeah, DPZ, the biggest pizza company I think in the world. I like buying my pizza from little shops, but these people deliver, and in any case. Again, you can see on the weekly chart, above 3 ATR channel, overbought, panic buying on the force index. Be alert. Go to the daily chart. How do you like this pattern? On one peaceful evening, Domino Pizza, DPZ, closes at 349, and the next morning it opens at what's the number here? It opens at 398, $50 up, 15% almost up, right? Goes a little bit higher and begins to sink, and at some point the last price is below the goes. Well, I don't wait until the end of the day. As soon as the last price goes below the open, I'm in it. Another short trade. Nothing spectacular, but very reliable. What else? I just pulled up a few trades that I did recently, during this earnings period. A computer company. The weekly is near the upper channel, always a suspicious place to be, crazy place. Look at this beautiful pattern on the daily. Same thing. Earnings opens above the channel, but look at the bearish divergence from ACD histogram. Highly overbought force index. Very nice trade. I didn't hold it all the way down, just about a week. Quick in, quick out. Here is CRM, a big marketing company. Plus 3 ATR channel, upside breakout. We go to the daily chart, and where did I do it? Where did here with a false upside breakout at this point. False upside breakout and closes lower. Force index wildly overbought, sold short, took it down to the value zone, exited, etc., etc., etc. So my point is, everybody trades differently. This is like driving. We all take driving lessons in school, and we drive cars differently. Some drive them better than others. It's like I hope I don't offend anyone by saying it. It's almost like sex in a way. You can buy a manual and read how to do it, but you will do it differently, right? You will do something. You will do it the way that appeals to you personally, for whatever reason. So the same thing with trading. You will watch, you will talk, you will ask your friends, you will read a book, but in the end, you have to do what appeals to you. I'm a short-term trader, and I love shorting. So I showed you a few things that I like. you don't have to trade the same way. We're probably different people, and you have to see what you like. If you have a kind of peaceful, quiet, patient temperament, you will look for something like Moderna, and say, you know what, this thing is fundamentals are great, and they have this unique ability. Why not? And you don't have to look at the screen every day. I spend many hours every day in front of the screen. You have to decide what works for you. Roman, I'll stop sharing, and I want to take a quick look at the into our chat room just to see what people are saying, so that I don't just give a monologue. Where is the chat? Where is the chat? How? Come on, let me open it. Show a chat preview. I don't see the chat. How? Oh, Q&A. No open questions. Chat once again.
Next one.
Came up. Shamolik asks, can you repeat the title of the recommended book? I think it's called One Up on Wall Street. But the important thing is, I remember the name of the author, Peter Lynch, L-Y-N-C-H. Very nice book. Enjoy reading it. By the way, there are several books that are worth reading, but I won't get into it now. Christian is asking, you can play with options, sell one call and one put, and buy one call and one put, and limit the risk. It's too complicated. I find that all these complicated strategies with options are they're expensive, and eventually commissions and slippage do you in. I mean, that's how big funds trade, but they have great computers and tremendous number of personnel, and they hire all these PhDs, and they go for very small returns. But if you're a private trader doing options, to me, there is only one to do it, is write them. But you have to know what you're doing. Marius is asking, I know your time frames are daily and weekly, but are you watching the price action at all on intraday? Yes, of course. I make my strategic decision on the weekly. Am I a bull? Am I a bear? That's where I begin my dance with every stock. Then I look at the daily, and on the daily I define what's my entry, what's my target, and what my stop. But only so the weekly dictates the direction. The daily I work out entry, exit, stop, and then I will switch to intraday charts. And what I really like is looking at a 25 and 5 minute chart, a combo, and that's where I really dance. That's where I dance in and sometimes dance out. So yeah, I definitely look at intraday charts. Do you ever short below the center, even if you get, you know, I occasionally do, and almost every time when I do that, I end up regretting it. It's really the place to sell short is above value zone. Shorting below value zone, sometimes it just looks way too tempting. I just did it yesterday on one stock, and today I'm sweating my way out of it. You're much safer. But oh, I just got a fill on one of my profit-taking fill, which is nice. You're in a much better shape if you buy below value and sell short above value. I think I answered all the questions. Let's see, anything else? Well, we're going over time, and I really need to check the markets. I had two profit-taking quarters. I just got, your trade has been filled, says the computer.
And you keep thinking what it was, but it was.
Which one? Which one?
Yeah.
Not the worst. Not the worst problem. But Roman, pleasure seeing you again after this break, and looking forward to continuing. Thank you very much for a wonderful organization. Great pleasure.
Thank you, Alexander. Thank you for this class, and see you next time.
Looking forward. Take good care.
Thank you. And dear participants, as I promised at the beginning of our class, I just want to say some words about Alexander's indicators, how it's possible to use them on MT5 platform, which we offer to our clients, and to say some words about contests, which we have together with Alexander, where it's possible to get a prize. The latest book, which was written by Alexander, The New Trading for a Living, with his personal signature. So let's start with the indicators package. First of all, it's available for free of charge for Admirals clients with a balance on real account more than 200 euros. So everything you need is to send a request to our email elderdisk@admiralmarkets.com. Right now, for those who are watching us in Zoom on our live class, I'm setting it into a chart. And for those who are watching us on YouTube, you can find this email address in the description to this video you are watching for. Together with indicators, we will send you back chart templates, video tutorials, and everything you need to set up your workplace in the same way as you saw in right now during our class when we analyze stocks and different instruments. And of course, if you will have any additional questions, so you can send them back to these questions, and we will guide you and will help with every setup you needed. And if you're not a client of Admirals so far, our customer support team will help you and will answer your questions if you have any before to become a client of Admirals. And about contest, it's actually some gentleman contests which we have on our YouTube channel. So the key point of this contest is to be subscribed on our global YouTube channel. If you're not subscribed, I strongly recommend to do so. It's only also just not to miss our next classes with Alexander, but also to take part in our contest. So right now I'm sharing our YouTube channel in our Zoom chat. And if you watch us already on YouTube, so you're in the right place. So please subscribe. So we have this contest, like a really gentleman contest, where we have these rules of paper trading, I would say. And to be a winner, you have to suggest one trade which you expect for execution for next month, because we have our classes on a monthly basis, and today is 23rd of August, and next class we are going to have at 28th of September, so more than 1 month. And if you suggest a trade, one position, and if it will be executed during this month, like more than 30 days, and you will get a profit on this paper trading position, so you will have a chance to win the latest book of Alexander with his personal signature. We have, let's say, some steps in order to participate in this contest. And what you need to do to be subscribed on Admirals Global channel, like the latest video with a recording. Then in comments, suggest one trade for one asset which is traded in Admirals. We actually have around 5,000 different instruments. So the most liquid one we have in our offer. So you can check on our website, or if you're already our client, so you can check on the platform, or let's say in MT5 platform, it's also possible to check. And in comment, the way how to suggest a trade. So in comment, send instrument ticker or the full name, then entry price, stop loss, take profit price, date of post, so just to understand where you suggested your trade. And your position need to be executed from period from 24th of August, it's the day after today, and 28th of September. So this, as I said, more than 1 month, you have a period. And the winner will be the person who is position closed via take profit. We prefer, let's say, such position. We give a preference, let's say, to such orders. And if we compare a price movement in percentage, so we don't count leverage or other additional things which we can be applied for a trading activities. So just if it would say 10%, 15%, 5%, so we just compare all positions which traded during this period, which was suggested, and the position which got the highest movement will get a price. And it's last but not least, it is prohibited to edit the comment. So if it will be signed that it was edited, we will not able to count, let's say, this position in our contest. But as I said, it's a gentleman contest, and also together with a position which can win, we will also review positions which may have stop loss, for example. So just also to analyze mistakes, if it will be any. So please subscribe to our YouTube channel, suggest your trades, and participate in our contest. And it was pleasure to have all of you back after our summer period break. So we are back. Next class will be in September. So thank you for your participation. It was nice to have you here, to be here with you, to have Alexander in our class. And I wish you a good afternoon, a good month ahead, and see you in the end of September. Thank you and goodbye.